So this one is going to be an important one, guys. Why is it going to be an important one? Because you are going to learn in this video exactly how you can research a crypto project, how you can understand exactly whether something's fair value, how risky something is, what kind of team that they've got behind them. And then what we're going to do is bring fundamentals and technicals together to give us a bigger picture and understand exactly whether something's fair value, how much as far as percentages you should actually invest into it, how you can diversify. First things first, guys, we need to research the project. Let's dive in. Okay, so the first place that I'm going to look, guys, is a place where I can bring all the information from a fundamental perspective into one area where I can look and where I can research, find out how credible the project is, find out how risky the project is, find out whether the team is actually credible themselves. So I'm going to be using CoinGecko, not affiliated with CoinGecko. You can use CoinMarketCap, whatever platform you want, as long as it's got all this information. So we will use, what will we use? Polkadot. Use Polkadot as an example. So if we bring up Polkadot, what kind of information can we get and what is relevant, what's not relevant? How can you research it? So on the left-hand side here, you can see it's trading at $5.02 at the moment. It's down 1.1% on the last 24 hours. Now, this is an important thing here. This is a lot more important than people think because I use this as the risk factor. You can see 27. As far as the whole of the crypto rankings are concerned by market cap, Polkadot's number 27. Why is this important? Because if you're researching a project, we're using Polkadot as an example, that can give you an idea of how much that you can allocate into a project. Now, what you'll see is all of these high risk tokens that are 1,560 as far as the market's cap's concerned, 690. What that does is it allows you to understand that if you've got a pie chart with 100% in that, how much should you risk into something that is really risky, that's got potentially a chance of running if it runs hard, but it's got less chance of running. So if you've got a pie chart and you've got lots of things that are outside of the top 100, then potentially a few of those are going to hit your portfolio so hard. That's not what diversification is. Think about it as risk. So as far as Polkadot's concerned, if I had a pie chart, I'd stick 3% in. If this was something that I was interested in, something that I'd researched, and something that was, I don't know, 1,641 as far as the crypto rankings are concerned, and I had my pie chart, I'd be looking at like 0.5%. And if that thing ran, that 0.5% would go to 2, 3, 4% quite easily, but there's a higher probability of it not running, is what I'm saying. So use this as your risk factor, your market cap rankings. That's the first thing. What other information can we gather from this? Market cap. So we've got a 7,649,291,819 market cap. So the market cap is derived from the circulative supply against the price. So the circulative supply times that by the price, and then you get the market cap. So we know the price is $5.02, times that by that, that's the market cap. What is information? What is important information here? So circulating supply and total supply. This is important. Sometimes with cryptocurrencies, you get a low supply and then you get an amount that's locked up. When that amount that's locked up, that gets released into circulation. Now, it's all about supply and demand, guys. When something is high in supply and low in demand, that brings the price down. Now, if you unlock a load of tokens and chuck them on the market, what does that do? It increases the supply and then there's less demand, price goes down. So why is that important? Because the circulative supply is exactly the same as the total supply here. So that's a good thing. That means that they're all in circulation. That means that we're not going to get any unlocks and we're not going to get any dumps on the market that's going to increase supply and then reduce demand. So that's a good thing. And that's an important thing, guys. And you'll see it time and time again. If you look at the high risk ones, you see something like a low supply, and then you'll see a lot that's not into circulation yet, that's going to have future unlocks that are going to get dumped on the market. Next thing you can look at, guys, you've got your website here. This is the place. This is why I say it's a wealth of information all in one place. You've got the website, you've got the white paper. Why is the white paper important? Let's have a quick look at the white paper. So this is what a white paper looks like, guys. I don't intend to go through this with you, but if you're researching a project and you don't know how risky it is, go and have a look at the white paper, have a look at the roadmap, and then look at whether the team are actually meeting their targets. If they say in quarter two they're going to do something and that something hasn't happened in quarter two, then that is an area for concern. Not unless they've got a good explanation for it, guys. You can see whether things are being built on there. You can see whether the team's evolving. But there's so many scams in crypto. that you need to start doing your research. This is one way that you can do it. So what kind of social media presence have they got? This is a good idea to check whether the team's credible and check their social media presence. So if we just as an example, we'll have a look at Twitter, have a look at their Twitter page, and you can see you've got 1.5 million followers here, guys. So you can see that that's credible. That's a good thing. Does it mean you should put all your eggs in one basket? It definitely doesn't. So you've got all sorts of information here, guys, all sorts of like information about what it is, what it does, and then you can apply that to your narrative. If you've got a diversified portfolio with a pie chart, you might have different narratives between AI, layer ones, all sorts of different narratives within space. So you can read about what it actually does here. So that's the first thing that we're going to do. That is the fundamentals. Let's jump into the charts. Now we understand that they've got a good team. They've got a good social media presence. They've got a white paper that's available for everybody to view. They've got a website. They've got all that information on CoinGecko. So whether it's Polkadot, whether it's whatever project it is that you've seen, make sure that you research and understand what kind of ranking it is, what proportion of your pie chart overall as far as diversification it should be by looking at the rankings, and understand what happens if it goes wrong, guys. What happens if it goes wrong? An example of that was Luna. It was about 3 as far as the market cap was concerned. Everybody got wrecked on Luna. There's some horror stories about what happened on Luna, guys. Don't let it happen to you, and make sure that that pie chart, if something went to 0, can sustain that thing going to 0. So we've got a breakout here. We've got a potential breakout. This is where the fun starts. I'm a TA guy. Is it a good time to be buying? I'm not going to tell you whether it's a good time to be buying, but what I want to do is just zoom out, and I want you to ask yourself the question, what is your time horizon? Because that's an important thing. Are you looking to invest into something for a week, a few hours, a couple of days, a few months? Are you looking to invest for the next 2 years, the next 3 years, the next 4 years, guys? Are you holding any cryptos for the next 2 years, the next 3 years, the next 4 years outside of Bitcoin? Because you know what my thoughts are, guys. This is what happens during a bear market. If you want to hold for 2 years, you want to hold for 3 years, you are potentially, any altcoins outside of the top few are going to drop 95, 98%. Some of them are just going to completely die, guys, and they won't even make another cycle. So that's my thoughts on 2-year and 3-year and 4-year holds. Go back and watch my videos, my previous videos, because you know what my exit strategy is, and you know how I plan to exit my positions of the crypto market until the next cycle. I love crypto, guys. I'm not against crypto. I'm not a bear. I'm just understanding how the cycles work, and I'm being realistic as far as my approach is concerned. And I want to scale out on my positions, guys. I've accumulated at low levels. I want to scale out at high levels. So is it fair value? I digress. Polkadot, we've got a trend line here. We understand that once you break trend, the potential lows in. If you're wrong, you know exactly where your stop loss should be. This is the bottom of the range. This should hold strong support. So ideally, if we just bring up the indicators, you can see the stochastic's overbought at the moment on the daily. If we zoom out and look at a higher time horizon, you can see oversold. So on the 3-day chart, we're oversold. And then you go out even further on the weekly, oversold. So that indicates one thing, guys. The higher time frames are showing that we're oversold. The lower time frames are showing that we're overbought. So what could potentially happen here as this stochastic comes back down? Come back, double bottom, potentially test this wick. A lot of the times when you get these wicks, guys, these wicks get filled. So there's a chance that this could come down, fill the wick. And if that happens, that's a good thing. If this happens and it comes back down here to $3.50, that's at such strong support that you're likely to get a bounce, a move up on the stochastic, and a higher probability of break of trend. But what does that actually do? It gives you tighter stop losses, better risk to reward. So if you put your risk to reward tool on there, stops below the previous low, shooting for the swing high, then it brings it to a 4.16 risk to reward. So that's from a trading perspective. From an investment perspective, guys, you zoom out and you look how far this thing's gone. It's been in such a long accumulated phase. Absolutely, such a long accumulated phase. The bigger the base, the higher the space. 1,023 days. You can see here there's little resistance once you break out. Little resistance from $11.69 all the way to $23. You can tell because there's been no build-up of price action in this area here. So as you get a surge to the downside, once you break out, you get that surge to the upside. Target for that is $23.93. So we're not out there yet, guys. We're still in the range. We need the bottom of the range, which is showing we're near more fair value. I want to wait for this stochastic to come down, see if we can double bottom here, test this as support, and then have a break afterwards.